Most people think wealth management is just stocks, bonds, and retirement planning. What they don't realize is that there's an entire hidden layer of the financial system that most investors never even see. Before my co founder and I launched our own independent firm, we worked inside institutional finance. And one of the many things that changed my perspective permanently was seeing how wealth products were actually built and distributed behind the scenes. At one point, I was at UBS. I had to work directly with product teams to understand complex investment structures so I could explain and sell them to sophisticated wealth managers. And some of these products were incredibly esoteric. For example, I used to help provide access to a fixed income dark pool ETN, essentially a structure designed to give ultra-high net worth investors and institutions access to pockets of bond market liquidity that most retail investors would never even know existed. That was one of the first moments where I realized something important. Different layers of the financial system exist for different classes of investors. And once you see that from the inside, you start understanding how differently wealth can actually operate at higher levels. Another example is private equity and private credit. These investments are often presented as sophisticated institutional opportunities, and sometimes they absolutely can play a role in a portfolio. But what many investors do not fully understand are the mechanics underneath them. Some private funds use leverage to enhance returns, which can also magnify losses during downturns. Others can impose redemption gates or lockup periods, meaning you may not be able to access your own money during periods of stress or illiquidity. And this is not about saying these investments are bad. It's about understanding that the structure underneath an investment matters just as much as the return potential. What my co-founder and I realized over time is that much of the wealth industry is really built around distribution. Products are manufactured, packaged, marketed, and sold through massive financial systems that most clients never actually get to see behind. That is a major reason we decided to build an independent fee-only fiduciary firm instead. And honestly, it's the harder route. You do not have a massive institution feeding you leads. You do not have a captive product ecosystem. You grow slowly, organically, relationship by relationship. This is one reason only a very small percentage of advisors operate as true independent fee-only fiduciaries today. But once you understand how incentives and products work underneath the wealth industry, you start asking very different questions about who is actually sitting across the table managing your money. Follow for more behind-the-scenes insights into how the wealth industry actually works.